Well, I think that high-frequency trading is still not really understood, and there are a lot of misconceptions that leads to the misunderstanding. Basically, HFT players are participating to the efficiency of the market. They are reducing the spreads. I mean, it's amazing to see when the HFT entered Korea, for instance. The spreads were divided by 10. So those players are really crucial. On top of that, I was just discussing the other day with a very big broker in town, and they were telling me that 2/3 of their volume is generated by HFT. So it's kind of difficult for the industry to brush out all this business. However, of course, questions are legitimate. And there is always a bit of a conundrum between the latency that is legitimately requested by these players to reach the market and the risk, which is also a necessity, not just to kill the market. So how we can manage the two parameters, risk on one side, latency on the other side? I think the only answer to that is by technology. And by technology, I would like to underline 3 main points that the clearers need to have in mind when they set up their risk management system. So first is like, what we see more and more is the post-risk management system is more and more at the front line of the way the clearers are analyzing the orders. And this post-trade management system definitely need to integrate not only intraday data, but also real-time data. As a second point, it's like your system needs to cater with real-time feed. And what we see recently is like most of the major exchanges provide clearing fees, which gives like all the execution on the clearing fees, which is different from the front office feed. But this can be connected to your risk management system. And the third point is obviously, well, if you have the real-time feed, but your system is computing only on a 15-minute basis, then there's no point. So you need also your system, your algorithm, your risk management system itself to compute on as close as possible real-time basis. And why we have that? I mean, we have all in mind the story in May 2010, I mean, with this flash crash. What happened is like in 5 minutes, 1,000 points down, and nearly $1 trillion just disappeared. So that's an evidence that, of course, 15 minutes, is far too long. So to summarize, to me, it's like the way forward is definitely to have like a risk management system that includes this real-time market data and that includes computation on a real-time basis. And not only the brokers and the clearers could, avoid to increase the margin they request to the customers and then, force them to be not competitive, but also they can, cover the risk and still be competitive. So that's the only solution to me that I see, and that's fortunately that we have integrated those crucial points in our post-trade risk management.